Hey there. So you're newly self-employed in the UK? Then this explainer is absolutely for you. We're going to break down the whole self-assessment tax system into simple, manageable steps. Let's get right into it. Taking that leap into self-employment, it's huge, right? Super exciting, but it also comes with some new responsibilities. And let's be honest, one of the biggest is getting your head around your own taxes. Okay, so if the very thought of a tax return fills you with just a little bit of dread, that is so normal when you're starting out. Trust me, you are definitely not alone in feeling that way. But here's the thing, the trick is to stop thinking of it as this big, scary burden and see it for what it actually is. A process. Yep, just a series of steps. And that's what we're going to do right now, walk through those steps together, one by one. Alright, first things first, let's start with the absolute basics. What is self-assessment really? Okay, so in a nutshell, self-assessment is just the system that HMRC used to collect income tax from people whose income isn't taxed automatically. Like it is in a regular job. If you're self-employed, it's pretty simple. It's on you to report your earnings and pay whatever tax you owe. There is very clear, concise and comprehensive information available on the gov.uk website regarding self-assessment tax return obligations. This guidance explains who needs to file, important deadlines, and how to submit a return correctly, making it easier for taxpayers to understand and meet their legal responsibilities. Okay, but before we dive any deeper, let's answer the first and maybe most crucial question. Do you actually need to file a tax return at all? Alright, there's one key number you need to burn into your brain. £1,000. £1,000. If your self-employed income for the tax year is over that amount, then yes, you have to register for self-assessment and file a return. And listen up, because this is a really crucial detail. That £1,000 rule, it's based on your turnover. That means all the money you've brought in before you've deducted a single expense. It's your gross income, not your profit. Who must send a tax return? You must send a tax return if, in the last tax year, 6 April to 5 April, any of the following applied. You were self-employed as a sole trader and earned more than £1,000 before taking off anything you can claim tax relief on. You were a partner in a business partnership. You had to pay capital gains tax when you sold or disposed of something that increased in value. You had to pay the high-income child benefit charge and do not pay it through Pay-I. You may also need to send a tax return if you have any untaxed income, such as money from renting out a property, tips and commission, income from savings, investments and dividends, foreign income. Other reasons for sending a return. You can choose to fill in a tax return to claim some income, tax reliefs prove you're self-employed, for example to claim tax-free childcare or maternity allowance, pay voluntary national insurance contributions. Okay, next up, and this is a big one, deadlines. You absolutely need to know these dates because missing them can lead to automatic penalties, and nobody wants that, so you've basically got 3 key dates to circle on your calendar. First up, October 5th. That's your deadline to tell HMRC you need to file a return. Now, if you're one of the few who wants to file on paper, you got to get that in by October 31st. But really, the big one for pretty much everyone is January 31st. That's the final deadline to both file your return online and pay your tax bill. Right, so you're registered, you know the deadlines. What's next? Well, now we're going to talk about the main event, actually filling out and filing that tax return. And you know what? Almost everyone does this online. We're talking 97% of people. And the good news is, HMRC's system is actually designed to walk you through it. It asks you simple questions and builds a personalized return with only the bits you actually need to fill in. Pretty neat, right? Let's discuss which boxes to fill on tax return. You shall be asked to fill only relevant boxes to fill. Depending on your individual circumstances, you will need to complete different sections of your self-assessment tax return. These sections, sometimes called boxes, are used to report specific types of income and financial information. This may include employment income, such as salary or wages, and self-employment income if you run your own business. If you are part of a business partnership, that information must also be included. You may also need to declare income from property, such as rental income, as well as any foreign income you receive from outside the UK. Capital gains, for example, from selling assets like property or shares, must also be reported. Other sections cover pensions, other UK income, and any charitable giving you have made, which may be eligible for tax relief. You can also claim other tax reliefs and allowances where applicable. If you have a student loan, details of your repayments must be included. There are also sections for trusts and estates, as well as for residence and remittance basis if you have international tax status. Finally, if you are a Lloyd's underwriter, this information must also be declared. Completing the correct sections ensures that HMRC can accurately calculate your tax and confirm that you have paid the right amount. Alright, so you've filled everything in. You've hit submit. What happens then? Well, HMRC works its magic and calculates your final tax bill. So let's break down what's actually included in that number. Okay, so your bill is typically made up of three main parts. First, there's your income tax, which is calculated on your profits. Second, you've got your Class 4 national insurance contributions, also based on your profits. And third is something that often catches new freelancers completely by surprise, and that's the payment on account. Now listen carefully to this. If your tax bill is over £1,000, HMRC will ask you to pay in advance towards next year's tax bill. It's split into two payments, usually due in January and July. Honestly, this can be a massive shock if you're not expecting it, so it is absolutely vital to plan. If you no longer need to send a self-assessment tax return, you must inform HMRC as soon as possible. This is important because HMRC needs time to review your request before the annual self-assessment deadline on the 31st of January. If you do not notify them early enough, you may still be charged a penalty, even if you no longer need to file a return. There are several common reasons why you might no longer need to submit a tax return. For example, you may have stopped being self-employed, stopped renting out property, or you may no longer be required to pay the high-income child benefit charge. If any of these apply to you, it's important to contact HMRC promptly to make sure your tax records are updated and you avoid unnecessary fines. Thank you for watching. Completing your self-assessment on time helps ensure you pay the right amount of tax and avoid penalties. Always keep your details up to date with HMRC and use the guidance on gov.uk if your circumstances change. Getting it right today helps you stay confident and in control of your tax affairs.